Hey, all Sean Maloney, Digital Business Masters. Hope you're well. Another DBM Strategy Call, the end of March. So we've just come to the end of Q1, calendar Q1 in 2025 already. Amazing pace we're moving at now. And that's because so much is happening. And the job here is to pull everything together as the weeks transpire. Obviously, we've got overlays coming from prior periods and prior weeks, but we tried to condense everything into what we've experienced just the past week, and then we can build on that to make sure we're headed in the right direction and keep going when it comes to what it takes to build out a professional digital business in the digital space, particularly around Bitcoin. And the whole idea is to own enough Bitcoin to be able to retire from. Now, we've been working on this for years. Some of us have already achieved it. And it's a case of us making sure that we help as many people as possible get to a place where their balance sheet continually feeds cash flow into their lives. But at some point, you'll get to the point where Bitcoin itself, with certain mathematics I'll show you today, will be enable you to be able to use the asset to live the rest of your days from. And if you're really good, you'll manage it in such a way that that also provides a fantastic platform, if not a fantastic lifestyle for your bloodlines, which is, again, a key motivation when you get to a certain time of life. You want to start thinking about legacy, especially all the baby boomers and Gen Xers. Most of the people who are part of the DBM community are baby boomers and Gen Xers. We've basically lived off our grandchildren's and great-grandchildren's credit cards. Okay, and that fight is still going on geopolitically. The left liberals are very inclined just to keep that going and keep printing money. You could arguably, some of the business-minded politicians at the moment are looking at more of deficit deduction and reduction, efficiencies, cost outs, and realigning monetary supply. There's a definite global fight going on in that arena because some people just think they're entitled to everything, and some people know we have to get out there and work for it. So that's a demarcation that's very clear today, but that is what it is, and we just have to work through it whichever way it works, which has always been the case. Hence, we developed Digital Business Masters about 12, 13 years ago now. Broadly, it was a relatively slow start. It all came off the back of what happened in 2008, and we recognized that there must be another way. There must be another way for us to extricate ourselves from the legacy fiat system, to start developing the ability for us to become our own money supply, which has now transpired and definitely happened over the past couple of years. And to do that, we've also figured out how to invest in other people's digital companies to create cash flows. And we've done that across 14 industry sectors so far. And we're developing those all the time and managing those all the time, and obviously nurturing them to the best of our ability using something called tokenomics. So these are very, very special times we live in. In fact, the most amazing time to be alive, in my humble opinion. And it's just a case of making sure that we fully allocate our energy and brain space into what it takes to be successful in a globally interconnected, technology-driven world, especially as we're starting to look now at the effects of AI, etc., on the working classes. Inevitably, it's now moving to a place where people have to understand that you can't just assume that working for a living, exchanging energy and skill for currency, is going to be something that gives you 40 years to build up purchasing power so that you, God willing, and are healthy enough to retire and have a good long retirement from that point, are going to have enough income to be able to do the things you want to do. I think those days are long gone. In fact, it will now be the 20-somethings that are now struggling to maintain enough income. So what's the solution to that? Well, you need to own the underlying technologies that are creating the ability for human beings to be more free with their life choices. And if that's not what Bitcoin represents and digital assets represent, I don't know what it is. So it's a very interesting paradigm shift. And our job is to isolate that, identify it, isolate it, and act on it, which we've been doing now at DBM for well over a decade. So we're well down the track. And we're still here providing people with support every single day of the week to that end. That doesn't mean we're here to give you any financial advice. That's certainly not what we're here to do. We have always endorsed, always seek financial education. Don't seek financial advice. The advice still comes from legacy hegemony. It's people making income from the old way. The old way is still very much all pervasive and will continue to be so. Just look at legacy media, look at government policy. There's a very interesting demarcation now between, it's not even left and right politics. It's basically the liberal assumption that the government owes everybody a living compared to a more business-minded political approach where people need to get out there and reduce costs and increase revenue and add value and create benefit. Yeah, I don't know what that's called. I don't know why that dynamic goes next, but I just know that as far as we're concerned as individuals, the only way to get ahead is to own assets and then have those assets under management that you control, not some spurious central bank or some boss, or least of all, some leaderless government policy bureaucrats. There's definite shifts going on in terms of how bureaucratic governments and business-led governments are starting to shape out and look. Yeah, very, very interesting. So we just work in the middle of that, and we're certainly not here to give any advice. We're here to support and help as many people as possible understand what I've been talking about for the past 5 minutes. Then you come to the practical steps of needing to put onto, boots on the ground. You need to actually do things with the realization. Yeah, it's all about realization, education, application. You've got to move yourself into a place where you are taking definitive action every day. Every day. Just like getting fit in the gym or building muscle in the gym, it's something you have to do as part of your life DMO. And it becomes a habit, it becomes a rhythm, it becomes something that is part of you. And only then will it start to take shape once you've given enough time and resilience to what it is to build out your ownerships of varying different digital business approaches. The beauty of it, of course, is you get a choice. You get a choice. Some people, work in layer 2. They like to just get involved with cash flows. That's where you should actually be starting, by the way. Getting your assets into cash flow and keeping them there and being patient enough to let the organizations that you've decided to participate in do what they need to do. It's not easy because obviously you're working with third, fourth, fifth party operations. You are a consumer. You are a customer of their supply. They are suppliers to you. It's not your company. Yeah, if you want to go and do this on your own and build your own company, then go for it. But obviously many, many people, aren't in that capability or confidence. So we use other people's companies. We use other people's staff structures and solution provisions. And we do that in an array of different industries across the globe. You can see on this screen all the different sectors we currently operate in at DBM. There's hundreds of thousands of others you can choose from yourself. But obviously, we've been at this a long time, so we tend to have the relationships and the setups and people we can speak to, and even then it's not easy. Yeah, so we just keep working together to find the best we can. So that just gives you a broad overview of the church we're working in, a very, very wide church, which enables us to have diversity and more security. In order to access the nuts and bolts of how all that happens, obviously this call is all about an overview. It's a strategy call. It's all about looking at the big pictures so that you can say, right, okay, I can see what's going on in the world now. But how do I go and do something practical to enable me to take full advantage of what's going on and what we call front run? How did we know that it was a good idea to get in front of Bitcoin a decade ago? How did we know that? How did we know that it was a good idea to accumulate a balance sheet and start to find 14 different industry sectors on which to reallocate the balance sheet to cash flow? How did we know that? How do we have the confidence to maintain that every single day of the working week? How do we know that a shift in politics and the probabilities of Bitcoin being adopted by major corporations and central banks would be likely to occur under certain circumstances? Well, the fact is we didn't know that, but we had a good idea in probability over time that that would be where the world goes. And lo and behold, it has. So us knowing these things isn't just something that we hope and wish to happen. We work together as a global community, and we cross notes together, and we interface with each other, and we have conversations with each other, and we figure things out together. It's a mothership. And then About 5 years ago, we decided that, well, if we're talking about it, let's go and push it out into the world and help other people. And obviously, at that point, you're putting time into helping others, which is otherwise known as a business. And therefore, we have a subscription system that enables people to intercept and get involved with that level of knowledge faster than they would if they were on their own. So you've got 4 levels of subscription access. And obviously, each level gives you a higher and higher and higher and faster and faster and faster ability to interconnect and intercept so that you can get on with your business faster. Simple, right? And obviously, the most successful people are the ones who spend most time with us at the income level because they're with us with the workspaces every single day of the working week, or at least they're in the hub, yeah, which is the second most successful group of people because they're interfacing through 24/7 contact with the coaches who work on a global level, many of whom are now full-time, operating on all the things I've just been talking about and we'll talk about now. So you decide where you want to be with this, but remember, it's always a good idea to invest in yourself before you invest in anything else, because that's the safest place to get to where you want to be. And where do you want to be? Well, you simply need to be making sure that you, as quickly as possible, especially now at this stage, you allocate some of your energy and effort into acquisition of assets that cash flow. For decades, you may well have been simply taking time and skill, as we're taught to do so in school by our parents, by bosses, banks, and governments. We're taught to assume that your job is literally a job to go and work in a overall system that enables you to take a reward in currency for the time and effort you proportionally put into that system. Now, the vast majority of people, that means they're employed. For other people, it means they own a job. They're self-employed. But for some of us, we've figured out that, yes, those two things are absolutely fine, and there's no problem with any of that. But if you do want to get ahead faster, it's a very good idea to start to become a business system owner. In other words, we apply the cash flow quadrant, as per Robert Kiyosaki, to the digital assets space, which is something we've been doing for well over a decade. And that means that we are automatically business system owners. In other words, we own large proportions, in many cases, of the companies that work within those 14 industry sectors I showed you before. And we leverage other people's skill and effort and time, which by definition is a business system, to create us an income, either through the equity growth of the asset we own, or because we're helping people into a process so that they can do the same. That's called tokenomics. That's called owning the business that you consume from, not just consuming from the business you work in. Very, very different animals. So we encourage people at DBM every day of the week to do what the wealthy do, which they've always done, which is to allocate time and skill into the understanding, first of all, and then having the guidance and the support to go and put your working capital into cash flowing assets, which then enables you to fund liabilities. Very big difference. Buy and fund. You see the difference there? Very, very important difference. Use assets to fund liabilities. Don't think you need to go out there every day to buy liabilities. You don't want to be buying liabilities. You want to be funding liabilities. In fact, you don't fund them. Your assets do. See the difference? So that refines it down to that level. Now, at this level, well, that's fine, Sean, but what does that look like in real life? Well, it's decision time. It's very easy to look at the big picture and all the things we're going to talk about next with regards to macroeconomics and geopolitics and how much Bitcoin you need to own to retire. That's all very easy to say. But the practical reality of what you do separates the men from the boys, the girls from the women, the wheat from the chaff. That is the main thing. Mindset, skills, systems, income, wealth. There's a reason we follow that sequence. And the skills aspect is here. The skills aspect is all about, okay, so I understand that I need to do something different in my life. I understand that I need to allocate working capital that I'm getting anyway from my fiat income to cash flow creating assets. I understand that. Okay, but what are the steps I need to do for that to become a reality in my life? Well, there's 3 choices in a broad church. Bitcoin itself, which is obviously the main engine the main accretive engine that we have on our balance sheets. We've been doing this long before Michael Saylor, long before many of the influencers you listen to around the world now, even on legacy media. You hear these people talking these days. We've been doing this much longer than that. Owning a Bitcoin, owning an asset that is accretive. We've even learned how to reallocate that asset into collateral so that we de-risk our cash all the time. No matter what we do, which is a difficult thing to do, obviously, when you're working in the USDT space, yeah, you reallocate proportions of your working capital into things that are going to create you what's called a yield. So Bitcoin gives you equity. That's fine. Just like living in your home for 40 years, yeah? That might give you equity, it does, but you can't cash flow off equity, right? You can't make a living off equity. You can't make a living off a balance sheet. You have to put that balance sheet to work in some form of profit and loss account. So that's where you start to move some of your equity across to yield. And it's the yield that we're looking for all the time. Not easy to do, but it's very, very doable. 5, 6, 7, 10, even 12% a month. Yeah, but it moves around. You have to keep an eye on it. You have to make sure you're constantly moving. So the next thing, which is why we're so diversified. So yield, think about that. Now, something that we also do, which is higher risk for sure, but much more dynamic and can take a lot of fortitude and resilience, is the altcoin space. Because the altcoin space means you've got equity plus yield at the same time. You see that? We co-wrote a book on this called Collaboration back in 2021, whereby we were talking about what it is to own the companies that you consume from. In other words, you own them through the token, which is the share, and you earn the yield because the company gives you out a dividend as part of the global use of their purpose. So if you can own them as well as consume from them, you're contributing to the benefit of your own income in real terms and your own balance sheet in equity terms. And there's companies that we do that a lot with: solar panel companies, real estate companies, health companies, retail-based companies, lots and lots of ways we do that. Yeah, and we can show you all about that inside the academy. So that's broadly how we do it on a wider scope. Okay, so it's worth reiterating before we go into the depth of strategy, because if you don't understand this, then a lot of what goes on in global politics, a lot of what goes on in macroeconomics will just go straight over your head. Yeah, but if you're able to break down what's going on with government policy and business policy and institutional policy and fiscal policy and monetary policy, then and bring it back to this way of thinking, then you've got a chance to say, okay, so I can see now that what the governments and the bosses have been doing for the past 50, 60, 70 years, rather than being a victim of it, I can actually front run it and devise a business system that takes advantage of policy rather than being taken advantage of, which is why I personally got involved with this industry so heavily back in 2008, 9, 10, as a result of 2008. And we've not looked back since. In fact, we started doing that by the acquisition of physical gold when physical gold was less than $1,000. Physical gold has been touching $3,100 in 2025. And we'll just keep going that way because of the toga and the suit. If you don't know what the toga and the suit is, then you go and speak to the DBM coaches and they'll tell you the story. It's just an inevitable perfection of protecting purchasing power. Just the ownership of physical gold. And then it didn't take us very long to figure out, once we understood it ourselves, to allocate the same premise and properties of physical gold onto digital rails, which is why we own Bitcoin, which is exactly the same. This year, just a few weeks ago, Bitcoin went over its new all-time high of nearly $109,000. It's accretive. So this flies in the face of Keynesianism, Milton Friedman, Thatcherism, all the things we've experienced over our lifetimes, because all those types of economic models have been devised around the centralization of monetary supply, as they call it. It's actually currency supply. And if you've been listening to us for well over 5 years now at DBM, you'll recognize this schematic where we're talking about, well, how do you become closer to the money supply? Well, you can't become the center of the fiat monetary supply, but you can become owners of the assets that create the ability for the Fed to be the center of the money supply. And lo and behold, that's happening right in front of our eyes in 2025. The Fed are going to kick and scream and shout about not wanting to shift the hegemony that they've created since 1971. Of course, moreover 1913. But other central banks around the world, especially in the BRICS nations, are very much underpinning the way they operate with gold and increasingly now with Bitcoin. So would it be a good idea for you as an individual to own gold and Bitcoin? Because your alternative is to carry on the outskirts of this particular model where you're getting very, very little benefit from the issuance of currency. Quantitative easing is now, back in. Quantitative tightening is over. This is happening for all sorts of reasons we'll talk about in a minute. So are you going to go through another 5 years, a decade of austerity because you've decided just to stay within the hegemony of the current system? Or have you already been working on the fact that you can put more energy into the things that the central money supply, currency supply, is using to balance its books? Just look at what the USA is doing right now. They have to very, very quickly because other nations have got well ahead of them when it comes to how they're trading and interfacing with each other. We're in a very interesting time for this next 5 years. On top of that, you've got AI, of course. So you've got to make the mind up. You've got to make your decision. Do you carry on as you are, or do you start to get smart and do what the wealthy do and what the wealthy have always done? This is the fundamental thing we do every day at DBM. So there's 2 major factors that enable us to get big, high-level, 30,000-foot overviews. We stay well above the canopy. We have a look at what's going on. We don't get embroiled in all the day-to-day. We keep way, way, way up and make sure that we do our best to translate that into things that we can take near, medium, and long-term advantage of. So the near-term stuff going on is frightening. Yeah, people get very tied up with it, especially if you're new, especially those people who have been, catching falling knives and buying up assets, which unfortunately most of the general population do. They'll get excited when assets go to $109,000. They'll get excited when an asset goes to $3,100. That's when they start to buy. That is not when you buy. If you have a fundamental understanding of what's going on, and you do that by looking backwards, taking a bearing of where you are today, and then you can project and even predict the future. Once you understand that level of macroeconomic and geopolitical intelligence, it's very easy for you to keep working in the rhythm, which is exactly what we're doing right now. We're accelerating the acquisition of particularly Bitcoin at this stage, in this near term, this short squeeze era, right? Because certain things are happening that enable us to see what the next 6 to 12 months is going to look like. And one of the major ones is the M2 money supply. Now, you can't time it perfectly, but you get a broad feel for how it's working. And then you overlay that other awareness points, such as the effects of tariffs coming this Wednesday, the 2nd of April, 2025. We've seen what the effects of this seismic shift as the US government experiments with offshore revenue services, as opposed to inland revenue services, which is internalized tax. They're looking at externalizing tax. Now, it's not going to obviously operate that way because other countries are going to realize, especially on a reciprocal basis, that everything's going to just stay the same anyway. But all the US is interested in is making sure that it looks after its own manufacturing base, in fact, rebuild its own manufacturing base, and also make sure that it's not being affected overly by external goods coming into their country. This is all a goods and services type discussion. But they're also acutely aware that the hegemony of the US dollar means they know they've been exporting dollars, exporting inflation, in other words, for decades. So you can't just suddenly switch that off. So the Fed's very aware of it, which is why you're seeing QT ending. Now, both those things have a positive effect on Bitcoin because people realize that you can't just switch. They're going to take time. That's why gold's going up. People have to switch. It's not just people, it's big institutions, obviously. So what's the US government doing? As it's absorbing on what's going on with the likes of BlackRock and the deregulation and all the things going on around Bitcoin, Well, the US government is working as fast as it possibly can to own as much Bitcoin as it possibly can because it wants its cake and eat it. That also has a positive beneficial effect on us as individuals, which for the first time in human history can own monetary policies that move at the speed of light and can be owned by everybody, everywhere, with a seed word in your head. So this is why it's such an amazing time to be alive. Because whichever way this falls out, we end up with a benefit. All we just have to do is keep dollar cost averaging Bitcoin and making sure that we understand the reasons it's going up in price, which it already has been for the past decade anyway. It's just going to accelerate now. And that manifests itself when you know that there'll only ever be 21 million Bitcoin ever in existence. And arguably 3-4 million of those have already gone, they've been lost. So what you're left with, 18, 19 maybe? So then you can just go onto the chains and have a look at who owns all the Bitcoin. And therefore you can start to see how quickly the ownership of Bitcoin overtakes the production of Bitcoin, which has already happened. And therefore, where are these big companies going to go, especially the governments? We're not just talking about the US government now, we're talking about China, we're talking about Russians, we're talking about the BRICS, we're talking about the UK. I'm not sure what Europe are playing at, but that's a different discussion. Where are all these Bitcoins being owned? And if there's only a finite supply of them, who are they going to buy the Bitcoin off going forward that they need to power their economies? That's why, for the first time in human history, we have the ability to front run as normal individual people, which has never been the case with fiat system currencies or even physical gold. Yeah. Now, where Bitcoin goes next with derivatives and where it goes with futures and ETFs and everything else, that's a different matter, but that'll take years to transpire. We get a short-term benefit right now, which we've been aware of for the last decade, which is where we can start to talk about retirement of Bitcoin. Because as all this accelerates, we're just looking at the formula in the normal manner. M2 money supply up, Bitcoin sovereign wealth funds up, OTC, over the counter, down. In other words, there's not that much on OTC even now, let alone what's going on in the next couple of years. Exchange reserves down. Therefore, there's a less supply of Bitcoin available, putting more pressure on the miners, which is why the Trump family got involved with mining just today, by the way. In terms of global demand, yeah, that'll just keep going up, and therefore you have the price. So if we stick to that formula on a global level, then we have a very, very good chance of making sure that we get to where we want to be, which is to be in total control of our own money supply and reallocation of our balance sheet, just off the back of Bitcoin, let alone anything else. Now, on the geopolitical level, I've touched on a few things already, but it's just important to just take a step back and take a breath, because there's a lot of brinkmanship going on right now, right? Not just in the old world, where you've got a lot of saber rattling and warmongering going on, and people trying to hold power and being mischievous in terms of renegotiations around things, even rare earth decisions. Trump was very vocal on this morning or overnight in regards to what Zelensky's up to. You keep an eye on that, but you've got to understand that the deep state and the people who have been controlling a lot of the liberal left for many, many years are not going to give up easily, right? They want what they want. And as things get pushed and shoved, and not saying that the new crop of politicians coming in are any better, they're all the same at the end of the day, but you've got gaps of influence, gaps of opportunity that enable us to stay sane and keep an eye on where to focus. All right. So one of the places to focus is the hash race. Now, hash race is all about which sovereign countries can control as more Bitcoin than another sovereign country. Let's put it that way. Now, remember it, Bitcoin doesn't need bosses, banks, and governments, but bosses, banks, and governments do need Bitcoin. It's a very different thing now, because they can't untangle it. You can't own it. You can't influence it, in the way that you can influence fiat and fiscal policies and monetary policies the way they've done since 1913. Bitcoin's a very different thing, because it can't be owned by anybody. It's globally overarching every single political and business state that exists. Okay, so you've got a hash race going on, which has got to be better than military complex and fiat-based arms races. The Europeans right now would do very well to take a long, hard look at that. While they're getting prepared and building up, defense budgets, which is fair enough. Obviously, all states need to defend themselves, no problem with that. But for them to be so late to the party, like 20, 30 years late to the party, just suddenly now finding the money they need, even the Germans are finding the money they need by increasing their debt ceilings to go and start buying weapons. While they're doing that, the more informed countries of this world, including the USA, Russia, BRICS, and crucially, those in the Middle East around the Abu Dhabi area, they're into hash wars because they know that that's where the world's going alongside, obviously, oil. So this is all going to shake out. Now, what does it mean for us? Well, it means if you are a resident of Europe, you are going to find your taxes going up pretty significantly because they're going to have to fund that borrowing somehow. That's what the US went through for the past 20 years. That's now being shaken out. Obviously, we can have opinions on how that's being done, but at the end of the day, they're looking to take efficiency, they're looking to get costs down, and they're even trying to build a model where taxation comes from offshore. We'll see how that works, right? But it doesn't matter whether you're in the US or whether you're in Europe, whether you're in Australia, whether you're in China, whether you're in Africa. It doesn't matter where you are in the world if you want Bitcoin as an individual, because we get the ability to front run and work outside of that often ridiculous moving deck chairs on the Titanic mentality that we've been fighting against for the past decade or more when it comes to the fiat system. But you can now see it front and center, not even hiding from it now. You can see the way these politicians are more bureaucrats than politicians, as Europe goes, that they just really don't know what they're doing. They're just trying to find ways to control what they think is right, and that's being exposed. So the whole thing is very interesting geopolitically. Something that's important to us, because whether we like it or not, we're part of this because of the nature of some of the suppliers that we chose to work with over the past 5 years. We've got sanctions going on the Russian side or the eastern side of Europe that we're embroiled in. Now, what we do watch that very closely, obviously, because of that, and we want those sanctions, especially the SWIFT side of things, to be dissolved and released and taken away somewhat, obviously for our own benefits in terms of business decisions we've made. But just because if you look at it on a higher level, it's the right thing to do. I mean, you've still got a lot of European propaganda talking about, the ogre that is Russia. But if you look at politics going all the way back to the Russian Revolution and everything that went on in the First World War and bring that all the way up to where we are today, nobody can say that what Russia's been doing, pushing its weight around over the past few years, is a good thing. And obviously it's not. But if you look at it in the way that it's formed and now how they're determined to keep that war going, then you start to look at it on a wider level and think, well, okay, so surely to communicate and negotiate is a better policy, which is what the Germans and the French and the Brits were doing up until 2022. That suddenly shifted off the back of $300 billion worth of free, it seems, funding from the USA because of that particular political mindset. That's now completely changed. And now you've got a situation where in that same 3 years, the Russians have figured out a way around the sanctions anyway. So the sanctions are defunct and will become less and less useful as the US works closely with Russia and the Saudi Arabians through oil and the hash wars, all of whom now are working very hard on the Bitcoin standard in terms of their economics. And that leaves Europe high and dry with debt and higher taxes. So bureaucratic Europe, no leader, is getting left behind while the rest of the world moves forward. So what happens with sanctions is going to be very interesting. Either way, we need peace. Either way, we need people to trade and work together and not fight. And we certainly don't need warmongers saber rattling, changing changing their thoughts every 5 minutes. Yeah, around rare earth models and whether they want to be in NATO or not. That can't continue. So we're watching it very closely. China's obviously sat in there as well. Yeah. And just last week, they've now, again, because this has happened a few times, it's legal, then it's not legal. It's legal, then it's not legal. But now China has made it legal for their citizens to get back involved with Bitcoin and crypto. Okay. And that's obviously having a knock-on effect. So we're looking now for the next countries that are likely to become Bitcoin nation states to be down in Southeast Asia. Philippines and Indonesia looking like they're going to be the front runners in that, copying what's going on in the Arab nations, copying what's going on with El Salvador, copying what's going on in the USA, yeah, and obviously Russia and China in a bit more of a, a clandestine way, as far as we're concerned in the West at least. So the genie's out of the bottle. The genie's out of the bottle, and we just have to enjoy the ride now and do everything we possibly can to accumulate as much Bitcoin on our balance sheet as we can so that we can front run the growth. Because as well as the politics of this, you've got bosses and banks doing the same thing. They're all hedging in all jurisdictions, and they're making sure that Bitcoin becomes their maintenance of them maintaining their hegemony at the center of the money supply. Yeah. So just like we've done with gold over many years and Bitcoin over many years, it's just a case of making sure that you have that as part of your fabric of your business. Because in the end, it leads to an ability for you to start to do some mathematics. So this is the first time we've done this. I did this a few years ago, actually, figuring out, okay, so on time span and on new assumptions that are coming out now thick and fast, as we've just been talking about for the last 10 minutes, you can start to project, make some analysis. You can start to see the benefits of accumulation and holding, compounding, yeah, and patience. Patience is an underrated skill. But if you can visualize where you sit on a certain trajectory and the probabilities of price discovery and the inflation, the effects of inflation, which I still contest aren't going anywhere in our lifetimes. I think in our lifetimes, we're still going to be in this world of 10% per year monetary deflation. In other words, your currency becomes 10% less valuable every year. I think that's going to be with us quite a lot for a while yet. So we've known about that. We don't fight it anymore. We used to say, oh, we need the gold standard back. We need to get everything back on where it used to. No, I don't think so. I think what we need to do is get closer to the money supply and own a critical mass of a particular asset, in this case, Bitcoin, that enables us to be able to look at that in mathematical terms. In this particular example, it's a 4% accretion. So in other words, we can sell 4% of our balance sheet every year and still be comfortable. Now, we don't, at DBM, necessarily suggest that you should ever sell assets. We prefer to create that 4% in ways of putting our assets to work, but that's not for everybody. Right? We fully appreciate that's not for everybody because it is a very difficult thing to do, to manage, not so much do it, but manage it. Okay, we'll keep finding the mix, we'll keep finding the balance, we'll keep moving with suppliers and organizing different ways. But on a very large, broad level, if you just wanted to treat your Bitcoin like you would a house, that you can liquidate proportions of as time passes between, the next 15 years, then you're able then to take a position. So only you will know where you sit on this. Obviously, those of us that were accumulating back here, it felt like a long game, but as you can see, as you get closer and closer and closer, you can actually get to a certain time. That might be too late for some people, but you can get to a certain point in time where just over a Bitcoin itself will be enough for you to retire on the assumption of a trajectory to $1 million of Bitcoin. Now, for me, that's not something I'm going to build my life on. Just like I've not chosen to build my life on hoping my house will go up in price for over 30 years. What we do is we accumulate. This is a backstop, but at the same time, because of scale and collateralization and seeking of cash flows, we're putting proportions of our balance sheet into income-producing activities that drive cash flows that allow us to fund liabilities in real time. So there's a mixture of both we do at DBM. But as a broad overview, this piece of work is quite interesting in terms of the projections that we see. Yeah? So it's a 4% rule. If you spend 4% of your asset in your initial years to retirement and then adjust for inflation, that's the key thing about this. Adjust for inflation, it's very unlikely you're going to run out of money. Or currency, that is. Yeah, but I wouldn't backstop. It's a backstop, but I wouldn't rely on this. I think this is something to to take a shot of and say, right, this is what the world's looking like over this next 15 years. But clearly way more focus on the next 5. Yeah. I mean, is it beyond the will of man that you can be owning between 5 and 3.5 Bitcoin with 4 Bitcoin by 2032? Is that such a difficult thing to do? To put your mind to it? Well, you'll have to answer that yourself. But we asked the same questions back here. Is it difficult to own 20 Bitcoin? Shoulda, woulda, coulda, right? Do you wish you'd have been buying Bitcoin when it was $100 a coin? Or do you wish you were buying Bitcoin when it's $100,000 a coin? Well, down here, you will be wishing you bought a Bitcoin $100,000 a coin. That's the point, right? So it's a case of discipline. It's a case of orchestrating a process in your business at the highest level so that you can at least fall back on this at the point when you really need it, when you're hitting your 60s, 70s, and 80s, God willing. Yeah. So just a quick one there that doesn't make any sense unless you've been through the last 20 minutes. Because it's easy to say just own Bitcoin, but you've got to understand why. And then you can move forward with strength and confidence. Okay. To keep that going and make sure that strength and confidence and consistency and patience and resilience and organization and new skills, especially around numbers and cash flow forecasting, exists, that's why we have the Academy. So those who are most successful understand to work with each other more and more now. It's each other. A lot of people in the income level are much more sophisticated than they've ever been because they've been at it now a long time. They don't necessarily need coaching, but what we all need is a place to discuss and talk and get together and figure things out, because none of us have all the answers. But together we're stronger. Hence we have the Academy. So we'll look forward to working with you over there. You'll see the link below this video.